Soundtrack 1, 2, soundtrack. All right, good morning, guys. Welcome back to the live stream. Welcome, Grace. Welcome, Lucky. And I see so far not many crowd in the live stream yet. So yeah, let's just chill, sit back, relax, and enjoy the ride, okay? So usually when I start my day, I try to keep myself relaxed. A cup of coffee, some incense, spice up the mood. All right, good morning, guys. Good morning, Michael, Kashbi, Desmi, and Khalini. Good morning. Okay, so before we start, let me try a few things. Okay, cool. Now, let's take a few quick recap, what's going on in the gold market. So we did do some analysis 2 days ago, but the market has moved tremendously different, tremendously. Okay, so let's take a look at 15-minute charts. See, the market is really unpredictable. That's the case, you see. So 2 days ago, we've been analyzing the gold market, and we did mention that the market is back then is actually in, well, a bearish compression structure, where I'm having this hypothesis, where the market is going to keep on performing on a bearish trend, right? So now, based on that structure, we did make a forecast that if the market actually penetrate down here, and then if the seller managed to like defend it few times, I will probably do a sell trade. So lucky for me, I didn't actually place a trade for this particular time. So it is considered lucky, but it is actually a very good chance for us to reflect as well. You see, so the my planning is this, okay? If the price, went from here and then go down and have a few touch, at least two touch, to show me that the sellers still have the strength to defend this level, then I might go for a sell trade, okay, for a short. But it didn't actually give me the structure and the signal that I want, therefore I didn't go in for this position. So I didn't go in for this position. And same goes to this one, you see, it actually penetrates through and it broke the level. Okay, it broke the level and then it went all the way up to the POC, and then it started to form a new level, and all in a sudden it surged all the way up and form a new level right here. Okay, so this is the market cycle we're talking about. It always goes like this, a new level, and then go all the way up for exploration, and then it start to form a new level again. So this is what we call the market cycle, right? This is just how the cycle actually moves. But the thing about the market is that we don't know what will happen. Okay, it is impossible for us to understand and to know, beforehand what's going to happen. And that's just part of the business, part of the deal. So yeah, lucky for me, I stay disciplined. I stay truthful to myself. When there's no signal, there's no signal. Okay, I both of the position I didn't go in, so same goes with this one. Therefore, I didn't took the loss. Okay, I didn't took any loss for this one. So quick recap. So that is for gold, and let's take a look at Australian US dollar. Same thing as well. You see, I'm using the same hypothesis as well. So which means that I need at least like a few touches. One, okay. Two, even though that it is two, but the second one, it didn't actually manage to defend it and it started to penetrate off. So for this one, I didn't actually take any position as well. You see, I always try to look for a successful defense, and to me, this is not a successful defense. And I want to show you, this is a very good example of why I always wait. Some of the students, come in and complain, like why CG is always waiting, why CG is, not giving any signal. So guys, let me tell you, 2 days ago when I give you this signal, I want you to understand something very important. Okay, so my style of trading is this. I need to have at least two defense. So for example, for this one, if I want to do a sell trade, right, by using the hypothesis of this entire structure, okay, if I want to do this, then it means that I need to have a signal that the seller is showing me that the selling defense is the seller is still strong. So right here, I need the seller to show me at least two touches. Okay, this one I would consider one. Okay, and this one I would consider two. Okay, and after two, and how did it perform? Okay, it start to go down a little bit and then goes all the way up. Okay, so for me, would I take the first touches doesn't mean a thing to retest the level, and to me where I pay attention is the second one, which is this level right here. So the second touches I will start to pay attention, but for this one, honestly speaking, I would probably be stop out as well. Okay, if I were to be completely honest with you, after the second touch, I will go in for a sell trade. And what happens after I place the trade, which is this movement right here, it is something that I cannot predict, which means that even though I follow my rules for this particular trade, I would still lose money for this Australian US dollar. Okay, if I were to be, well, if I were to be extremely honest, even though I follow my plan, one touch, two touch, after the second one, if it didn't manage to go in, I go in right here, I would still lose money for this one. Okay, so it is just part of the game. We cannot really forecast what is happening in the market. Okay, now as for this one, well, this is not bad. Okay, this is not bad. This is US dollar, Japanese yen. So what I foresee is that if the structure actually, it is forming a compression, okay, and then it tap all the way down back to the compression, and buying power is accumulating, momentum to really push the price go back up again. And my hypothesis back then is simple. So if the price, actually pushes it through here, and then if I pay close attention, I'm thinking of it, if it didn't really break this level, okay, if it didn't really break this level, it is still underneath this level, okay, if it's still underneath this level, then what I do, I would really do a sell trade right here, and then it managed to hit TP. Okay, so this is part of the game. So as you can see, sometimes it have the structure, sometimes it's not. So there's something we call like muscle memory and intuition in trading. Sometimes you learn the rules so that you can break the rules. I don't know if that makes sense, but For example, sometimes why do you want to learn the rules? Why do I want to draw this for you guys? Because I know some of you guys out there, you need a structure. You need something to lean on before you understand how to go in at an optimal entry, right? But sometimes, if you follow the rule too much, you can't really benefit from the movement. So this is a good example as well. So to me, do I follow the rules all the time? Most of the time. But sometimes when the gut feeling is telling me that, the movement is worth the bet, I will definitely go in, and ride the wave. So for this one, a good metaphor, successfully hit the TP and we're out. Okay, remove all drawings. And let's try to understand. This is actually a good, this is actually a good movement as well. See? So we have two pairs, that didn't go in, and another two pairs that managed to hit TP successfully. Okay, few movement, hit the TP all the way down. Same goes to Swiss franc. All right. So you know how I do, okay? So I don't use the same chart pattern on daily basis. Okay, every day is different, every day is fresh. So we only pick the fresh ingredients to trade. So same goes to today. Right now we are going into the gold market, and we're gonna start from take our time to understand what is a uh, macro trend is going on. We are in a forecasting game with probability mindset. So when you're trading, you need to understand part of it is forecasting, part of it is probability, and another part of it is luck, right? So when you understand there's tremendous amount of luck involved in trading, you will be humble. And when you're humble, you have a better chance on succeeding because what we are everything that we do right now is just to understand the footprint of the weather and the regime of the market. But honestly speaking, um, can you really be 100% sure where the direction is going? No. When you look at the chart, the best thing that you can do is to understand the footprint. And we are hoping that we might have, a good probability that we can benefit from the upcoming price action based on the footprint. So this is what we are doing, right? We are not trying to forecast, is it going to go up or go down? We are trying to understand the footprint of the market first. So look at the chart, ask yourself, what is the current regime? So first thing first, ask yourself, what is the current state of the market? So we do have a level here. And the next would be understanding the volume price of this movement. So current price, based on the FVRP, we understand that it is in low volume mode. So when you understand where is the low volume node, well, low volume tells me, there's very, very little trading activity occurred, at the particular price level. So after doing some charting, try to understand the market structure, the market regime. Currently, right now, at this very moment, when I look at the chart, I'm trying to reflect and ask myself what is actually going on in the market. Because the thing about, technical analysis, the thing about using indicators, drawing horizontal lines, trend lines, is that when you draw it, it is reshaping your hypothesis in your mind. So right now, obviously for me, there's a few bias, okay? And I need to be really, honest with myself. So um, the first thing would be I am, biased by, I am having this selling bias, okay? Because when I look at the structure, it is formed by a few things, okay? I look at, um, there's a few things, there's a compression, okay? There's a compression here. You see, there's a compression. So when there's compression and I'm looking for, potential true break. So selling bias, compression, true break, it makes me want to click the sell button. It makes me want to click the sell button. Okay, so it is not like, is it correct or is it wrong? It's about asking yourself, like, what are you biased of? So I'm biased by selling due to the structure that I'm seeing. And the second structure would be I'm looking for, understanding the entire momentum right here, which is a strong selling power that is being held previously. So very strong, okay, strong distribution, okay, strong distribution wave from, macro trend. Okay, even though that there's, a pullback, but still the pullback is being like pushed down slowly. So which means that, it still have that kind of momentum to go down. You know, seller still have strength. Okay, seller still have strength. All right. And the third and the fifth point would be, point POC. Okay. POC is below the current price. Okay. Which is it's gonna serve like a gravity. All right. So when I have this kind of like, structure, the probability, would be a sell probability. Okay. So the bet, what's going to be the bet? The bet would be short, okay, is better than long. Okay, short is actually better than long, based on probability. Okay, it is EB plus. And there's another one reason to support this is because that I have, asymmetric is more important than accuracy. Okay, and what do I mean by asymmetric is more important than accuracy? Well, simple. You see, if I do a buy now, right? If I do buy and make a long position, well, I am actually fighting against the entire wave here. Okay. But if I do, a short, I am, trying to ride the wave, with very low, low position. So that is the, assumption that I'm having. So for gold, I'm thinking of going in for a sell. So I'm biased towards sell, trading for price acceptance. I think that the market still have plenty of room for me to, place the trade. So let's zoom in a little more and spot for the level. You see, still have tremendous power here. So yeah, for this one, for this particular trade, I'm going in. I'm going in for a sell trade. Even though that the buyer is trying to defend, but still it is forming this compression. Selling power is still really strong. So next would be, understanding your stop loss strategy, right? So for me, the next question would be, when will this entire bias be wrong? Okay, well, the bias is going to be wrong when this structure is broken. Okay, when this structure is broken, then I'm going to be wrong, right? So the next question would be, how do I know that this structure is going to be broken? This one. So it's simple. I decide that if the next price movement hit this price, then it means that I'm wrong. Okay, it's that simple. So I'm going to go for, I might enter right here. And then I'm going to do a very, very tight stop loss. I'm going to use this as a reference. Why? Because I don't know what will happen to the market, right? So here, and I'm going to aim for at least, 1, 2, 3 here. So yeah, for gold, I'm going in right now. Let me do some. Yeah, this would be a good aim. Yeah, going in. Hey Chad, please help me to do a calculation for this particular gold trade. So I'm currently planning to go in around price of like around $4,528.92. I'm going in around that price range, and the stop loss would be 4,548.75. The TP, I'm actually targeting 4,467.25. $0.97. So I'm going in as a sell trade for this particular trade. And I want you to help me to calculate the optimal um, lot size for this particular trade. Thank you. Going in as sell. Selling gold right now. Right. Remember to set your stop loss, guys. Right, let's go. First position in. So we'll see how it goes. My hypothesis is simple. Going in, down, tap here. So I think that the price will actually like respect this level. It will go all the way from here to here. Basically trying to respect and come and retest this level. Slowly, definitely. All right, cool. So let's just wait and let it float. Meanwhile, we're waiting. Let's let's go for the other market. All right, let's take a look at other market. Currently checking out Australian dollar, US dollar. Just a moment. Right. So currently when I'm looking at Australian US dollar, um, so Australian US dollar, currently the price is in a low volume zone, which is, from a macro trend point of view, it means that right here in this price action here, it has a very thin line and very low trading volume. So when the price is actually in the low volume zone, it means two things. One is either it's going to like penetrate and go all the way down, or it is going to be like accelerating, like a highway and stuff, go back up and respect this trace. So based on my observation, I'm thinking it has a really good chance to have this kind of reaction. You see here, it has a really good chance to have this kind of reaction, which is, I think the price is still going to respect this entire zone here. You know, it will only have, that kind of true break when it reaches this point. So for me, I think we still have plenty of room to do some trade around this area. So I'm looking for a buy trade for Australian US dollar. But before that, let me take a closer look to see how does it respond for this particular level. So entering right now would be too risky. If we enter the trade right now, it's gonna be like so 50-50, right? So for me, I'm thinking of a buy. Okay, so what is the bet? The bet would be I'm gonna monetize on accumulation power. Okay, which is buying power. All right, I'm gonna go for buying because I do think that the price will respect this level and it will break this structure and go up. So the next question would be that what would be the perfect entry? So there's no perfect entry, there's high probability entry. Now going in now is slightly too risky. If I go in right now, it may go two-way. It may like, if the selling power is still strong, it might respect this level a few times and then it will just go down. So this is not something that I want. So I needed to give me some confirmation that it has, the buyer has successfully defend this level. So which means that I'm only gonna do entry if the price is actually respecting this level. Okay. Going in right here is not really a good idea. But going in here around this zone is a good idea. So if the price actually reaches this level, went from here, tap a few times, and it break the structure, then it would be a really good high probability trade. But going in right now is extremely, extremely risky, right? It is too risky to go in right now. So for me, if it reaches this point, I would probably set like around a 9p stop loss. Okay, and I'm gonna aim for like at least 1 to 2 for this particular trade. Okay, so for now it is just like shadow trading. I'm just dropping it down here so that tomorrow we can see. Now if we didn't manage to place a position for this one, it is fine. Okay, now before that, it seems like gold is performing extremely well, so let's get back to gold and see what is going on. All right, not bad, not bad. It is heading to a direction. It is doing its thing. So who else is profiting from the gold trade? Okay, if you're profiting from the gold trade, share in the group, share the joy. And right now I need to pay attention for this particular level. I'm thinking that we still have plenty of room. I try not to like, because the deal is to make at least 1 to 2. So yeah. Take- So TP1 would be here. All right. So let me go for okay. This would be TP1. Let me draw a nice line. Okay, TP1. TP1 here. So let's take a look at TP2. So let me clone this. So this is TP2. Okay, it's currently targeting TP1. And right here we have another one. TP3. Okay, so meanwhile, just wait and let's see, let the market do its thing. So if you want to use a safety pin, you want to like adjust for break even, it is fine. Make sure that it hits TP2. When it hits TP2, it is okay for you to adjust for break even. All right. But before, it hit TP2, don't do anything. Let the market do its thing. For this particular setup, wait for TP2, which be if you hit TP2, it is okay for you to use the safety pin. All right. So yeah. So meanwhile, while we're waiting, just let the market do its thing. Don't interrupt it. Let the plan play for itself. All right, so meanwhile, let's get back to our next market. So yeah, for gold, for Australian US dollar, just wait. I can't really go in now. Going in now, it is way too risky. Okay, it is way too risky. Um, yeah, another good entry would be somewhere around here. Okay, another good entry would be somewhere around here. But I still need to wait, you see, because if I'm going in here, it is still not really in a very good high probability. So for me, Australian US dollar, I'm going to pass unless it touches this zone. Okay. If it didn't manage to go to this section and see how it reacts, I won't go in to do anything. So for Australian US dollar, I'm going to pass for now. And let's take a look at US dollar and Japanese yen. So for the daily chart, US dollar, Japanese yen, let me take a look from the entire month so far. So I'm gonna go all the way from the very first opening of March, 2nd of March, cool. 2nd of March, all the way to, well, today. Not today, but so we start from the beginning of March until yesterday, which is 25th of March, and we'll see how does it react. You know, currently we're doing US dollar, Japanese yen. Well, basically currently the price is in a low volume node of the month. See right here. Not the lowest though. Not yet. Still on the way to TP1. Stick to the plan, guys. Current price in medium volume mode. Okay, so right now, currently, I've done most of the charting for UJ, and gonna be a quick recap. We are going to start the recap from 4 hours. So now you see there's three different colors of rectangular right here. Now, three different rectangular colors, one in black color, another one in yellow color, another one in white color, right? So for the black color, it is actually point of control. So what I do is that I go to the macro time frame and I try to understand for this entire month, okay, for the entire month, start from 2nd of March 2026 until yesterday, 25th of March 2026, where is most of the price being occurred, being traded. So based on, the FERP, we understand that right here it is going to be the POC of the month. So this volume right here is highly respectable. Okay, it is highly respectable. It is served as a magnetic gravity zone where the price is most probably going to respect that. Now, the next thing would be that where is the price actually, doing their trade. Currently, it is actually making a trade in what we call a medium volume node. Okay, so when the price is in a medium volume node, it means that it is negotiating. It is currently in a phase of negotiation between buyer and seller and trying to understand that where they want to go next, which means that the current regime of the price is actually in exploration and negotiation. So when the price is explorating, negotiating, it can mean both ways. It can mean that it is being rejected and then it go up there and try to penetrate through the low volume node, which is easy to penetrate, right? So now based on probability and hypothesis, we want to understand that how likely it is that the price gonna have this movement from this level and go down again, right? So the next question would be if we zoom in to the 30 minutes. So we're gonna zoom in into 30 minutes. Okay, and then we want to see, because I'm placing my trade in 15 minutes. So let's go to the 1 hour. And we want to see the reaction, how good is, who is actually stronger right now. Now, based on the current movement, we can see that, accumulation power is being formed right here, obviously, right? Accumulation power is being formed tremendously, successfully pushing it up, pushing it up, pushing it up until it reaches MVN, medium volume node, negotiation. So when it is in the medium volume node, it can mean both ways. It can mean that it will try to go all the way up here, and then who knows, maybe form a new level here. Or what happens is that if the negotiation fails, it will actually go down and respect this level. Now, for me, is there like a potential trade right here? Well, honestly speaking, I would like to see, more movement from the seller side. So let's zoom into the 15 minutes and really take a closer look. How well is the seller doing? So you see, seller is pushing through and seller is pushing through. So here we have some debate going on. And here, buyer is successfully pushing it back in. And the seller is slowly regaining the momentum of a selling power. So for me, I couldn't help to think that this might be a really good sign to go in for a sell trade, because I think that the level will actually respect this gravity zone right here. So this would serve as a gravity, and this would serve as a negotiation with signs of seller is actually regaining power. So therefore, US dollar Japanese yen, I'm actually planning to go in for a sell trade. Okay, so right now, prepare guys, US dollar Japanese yen, I am actually going in for a sell trade. So the next question would be, how do I know that I'm wrong? Short position, going in around this area. Okay, so if it managed to go here, I'm going to use this structure. Maybe like yeah, maybe a 10 pip stop loss will do. This will do the work. Oh, yeah, this structure. Yeah, around 8 pip stop loss. Aim for, if I were to aim for this, I'm going to aim for a big chunk of profit here. 24 pips. Okay, aiming for some movement like this. So yeah, I'm going in for US dollar Japanese yuan. I think that is a really good chance to make some nice profit. So let me do some setup. Hey chat, so currently I am trying to make a second position trading. I am trying to trade US dollar Japanese yuan in a selling position after I place the gold trade that we allocate just now. So currently for UJ Japanese yuan, the price is currently at 159.46 cents, and I'm planning to go in the sell position. The stop loss would be set at around 159.54, which is around like 8 pips stop loss. And I'm aiming for a 24 pips profit, which is a TP3. So the price of TP3 would be 159.21. Now, what I want you to do is to help me to calculate based on the first position that I open in gold. I want you to calculate the lot size that is optimal and beneficial to my account, my portfolio for this particular trade. Guys, stand by. We're going in for US dollar Japanese yuan, okay? I'm doing a sell trade for UJ. All right, UJ going in. So UJ going in for sell right now. Okay, let me make some adjustment. So US dollar Japanese yuan going in at a sell. Okay, let me update you guys in the signal group. All right, let me go to the market and set some TP1 and TP2. There you go. All right, guys, US dollar, Japanese yen, safe to go in right now. All right, TP1, TP2. So far, so good, guys. Nice trading day. All right, guys. So feel free to follow the signal if you feel like to, but make sure that you take good care of your own position sizing, okay? My lot size is doesn't equal to your lot size. Remember that. So we have a few positions now. All right, so far so good. We have two positions floating currently in the trade. And let's take a look at the gold. Not bad as well, still doing its thing. Okay, still doing its thing. So this is why I say asymmetric is more important than accuracy. You know, if you lose small. If you win big. Okay, that is the thing that we're talking about. So for this particular trade, we aim for TP3, we do break even safety pin lock when it reaches TP2, okay? Ooh, Australian dollar doing staying, guys. Did we miss it? Not really sure, but let's pay close attention. Well, I'm definitely not going in now. Um, you know, I'm expecting a pullback. So let's wait for the pullback. The thing that we know that is the structure is broken. So guys, Australian US dollar currently doing its thing, breaking through this structure. So we did mention that we want to monetize on accumulation power, right? Which is buying. So, it actually happened right now. See? So currently what we want to see is that we cannot go in now, definitely. We expect a pullback from here. So I'll see how it goes. So let's expect for the pullback and retest this level. Okay, guys. Oh, let's just chill a bit. I did my thing. So 1.5 hour in a flow state. Um, just enjoy myself. Now, right now, currently, just speaking out loud, I'm currently in a phase where I need to rest a little. Okay, I need to rest a little. Um, I've been analyzing 2 to 3 pairs. I realized that the optimal flow state would be when I'm, well, when I am the first 1 hour and a half is good. And right now, the brain power is starting to, mellow down. So I try not to force myself um, to trade the market. If I force myself to trade the market, it won't be good for me. So to me, 2 to 3 high probability trade would be enough. And as for Australian US dollar, I'll see how it goes from here. Debbie says that, do you think market is harder this year compared to before? Well, honestly speaking, I am not influenced by news. I am not influenced by I'm trying to tell you that I'm not a news trader or trend trader. To me, I am 90% technical. So to me, every day, has a chance and opportunity for me to make money because I'm trading intraday. So like longer time frame is not really relevant to me. Based on my setup, based on the past few months that you guys been trading with me, you understand that I seldomly talk about news. I seldomly, look at what happens in the macro because I don't believe that I can ride the wave of news trading. To me, I am using auction market trading as my hypothesis. So to me, all I care about is using auction market theory to analyze the market regime and market state that is happening right now within 24 hours. So you see, in 2 hours time, I managed to came up with 2 to 3 positions. And what I do after this trade, well, I go and meet my clients, my students after, having lunch, and I don't do anything anymore. So every day I have 2 sessions of trading. For the first session would be morning 10 a.m. to 12 p.m. And at night I'll be doing like around from 10 p.m. to 12 a.m. So I only have 2 sessions, 2 windows of trading. And during the middle ground, of the session, I don't do much. I just meet my students, clients, talking about like fund managements, etc. So do I think that market is harder this year compared to before? Well, the truth is I don't really pay attention on is it harder, is it easier? I don't think it that way. To me, I am just trying to look at the chart, understand the footprint of the market, stick to my plan, um, stick to my trading philosophy, and that's it. Because I'm doing intraday trading. Um, Long spectrum regime is not really relevant to me. And I hope that it answers your question. All right, guys. So yeah, that's probably it for today. Just a quick recap before we end our session. So the first position would be gold. Okay, I'm placing a bet there where I think selling is much more high probability than buying. So right now I'll let it float. It is meant for maybe 4 to 5 hours of the position. I'll see how it goes from there. So remember, if you place a trade, if you want to do a safety pin, remember to do break even when the price hit TP2. Okay, turn on your safety pin when it reaches TP2 for gold. And for US dollar, Japanese yen, I am still thinking that it's gonna be respecting the POC right here, which is highly respectable because it is a macro entire month of POC. So I think this gravity zone is highly respectable. So I do believe, I do have that belief that, the price will actually respect this area. Okay. And as for Australian US dollar, I am expecting, a pullback to retest this level after this sudden spike up of the trend of the market price action. So there you go. So today we look at 2 positions, gold. The second position, US dollar, Japanese yen. Okay. And then, the third position that yet to be confirmed, which is Australian and US dollar. Now, before that, nothing much to say. Thank you very much for investing 2 hours of your time with me. My name is Kelvin, and I wish you guys a very, very good week ahead. Okay, so expect more from us. We will be doing like podcasts, educational contents for you guys to, just have fun trading, learning with us. And if you feel like want to learn more about auction market theory, intraday trading, making money on a daily basis in the market with me or with Prem or Alan, feel free to contact Grace and customer service. All right. So thank you very much. I'll see you guys tomorrow. Peace out.